Hello and welcome to another update video about SEI. SEI had a really good reaction to our support zone yesterday, to this yellow support zone after forming a potential 1-2 setup as per the yellow scenario. The idea was that, either here we get a reaction in this region in yellow between 67.7 and 81.8 cents. The market did react actually exactly from where it needed to, or if we drop further, we could fall back in a wider wave 4 correction. That's technically still possible, but has become less likely after the breakout. And that, however, we are bullish against both support regions. So really only the overall bullish thesis on this chart needs to be revised if there's a break below 51.9 cents, which is here, the larger degree 38.2 Fibonacci level. As long as that's holding though, we can focus on higher more imminently. And especially the upper support region did hold. I made you aware that in this yellow count, the C wave had reached the ideal level to form a reversal. And we've seen that, and there has been basically an intraday move, or there was an intraday move of over 40%. So, I mean, obviously this can still fail, right? And SEI has become increasingly choppy here. But I shared with you in a previous video how simple this is actually to trade, because you have two very well-defined support regions, and if the first one breaks, okay, the lower one should still offer support. So it's all about scaling in, scaling out. I explained that in one of the previous videos. So that was already nice profit. So of course this can still fail, and I want to share with you the levels that now need to hold for more immediate upside continuation, because in an impulsive pattern the third wave should reach minimally $1.42 or ideally $1.53 plus. And if we talk about, okay, what is an ideal target? Yeah, $1.53, the 1.38 extension level. But if it's then an impulse, there are certain levels that now need to hold. For example, here, I really wanted to hold the 95.5 cent level now. That would be the 50% retracement of yesterday's rally. And what could happen is just a retest of this trend line from above, possibly. Okay, so that's something I'm definitely actively monitoring here. We're now in a micro support area, which started at $1.05, and next support is 99.6 cents and then 95.5. From here, we can continue to move up further in this third wave. I have to say though, if we get a break below yesterday's, not yesterday's low, below the trend line and below the micro support area, well, that would be a first indication that something on this chart is changing. And it could be, for example, here this impulsive potential could reduce. So the upside momentum will then decline, reduce, and slow down. And it would indicate that something different is going on. So it would not necessarily be bearish, but it certainly would not be directly bullish. And the chart would lose its immediate bullish, or let's say immediate impulsive potential. Impulses are normally the, let's say, the most straightforward waves to trade. So I can tell you, if we get a break below that orange line or orange range, it will certainly be a warning or an indication something different is going on. In a more straightforward way, this would hold and we could climb higher. Below 95 cents, it could still form a diagonal, but it would be a first indication that this wave 3 hasn't started yet. It could still form some kind of a diagonal, but because this is a 5-wave move, I mean, it would be difficult. There are patterns that could apply, but it's all, let's say, unclear probabilities. So I would prefer if it turns around in this region and carries on. It would at least, if it is an impulse, this would be the ideal area to turn around, possibly after a retest. That would be quite deep though for an impulse, but valid as long as we're holding that 50% retracement. Okay, what is the level to watch if we break below that level? Well, then it's yesterday's swing low, so the 79.1 cent level. As long as that level is holding, we can still focus on further upside, but it would be challenged, this assumption that wave 2 already bottomed. If we break below that level, well, then we would have to think about, okay, how could this still be structured? There would be patterns that apply. We could experiment with patterns like a larger diagonal pattern, right? Ultimately, what I would say is, below 95.5 cents, the immediate support region or the immediate support level, this entire support range combined yellow and orange will become relevant again. So that's what I said. It is actually quite straightforward to trade this chart. I mean, it's not one that it has performed really well. It has performed really well before, right here into the highs of end of December. Now it's more for range traders, but it's still at some point should break out as long as these support levels are holding. But I shared with you in a previous video, how can you manage that as a range trader? It's quite simple. So you just define the range, okay? So we have, it doesn't need to be perfect. So we had several opportunities to buy. Triangle indicates buying, okay? Larger position size as we go lower. This triangle represents selling, so we sell more of that. So we buy here basically on the way down. You never get a full position, scaling in like a grid bot, and then selling as the price goes higher. So that would have generated amazing profits in recent months. I shared that like 1 or 2 months ago, this sort of small article for channel members to indicate how this could be handled really. And it's very simple. You just split this in half and you buy below and you sell above. Just note that below 51.9 cents this is likely going to break down. That's at the moment my best perspective here on SEI. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye bye.